Damn, I just recorded this recap like 20 minutes, but the audio is weird. I don't know what happened, so I'm just gonna redo it. So let's go over the narrative for like bearishness. So coming today on, if you just look at indices alone, you can't really tell that's gonna be bearish necessarily, because when I look in this daily candle, there's no reversal, right? Look at this consolidation on all markets, consolidation, consolidation. We do have SM2 to RTY, right, with this high up here on the daily time frame. But again, no confirmation to that. So you would think that we'd have to resweep the high, which I would too. Like that's what I would be demanding, right? So I can't catch the high of day here, but we can start to think that um, we could see bearishness. So here's why. I haven't talked about this too much, just a little bit. I've been talking about it a little bit more, but you guys can look at these other markets, and it can help you gauge where indices can go, right? So if you look at gold and silver, is that gold had already started to move lower, right? It's already started to move lower. You look at silver yesterday, right? It's already started to expand lower. Look at indices, right? Have not expanded lower. They're supposed to be trading in the same direction typically, okay? Now, the oil is what gives it away because this is what is really obvious here. So we talked about this yesterday. This is extremely clean framework to go long here. We marked out the current weekly range from Monday to Wednesday's high. You can see that this asset had not taken out Monday's low. But if we go to RB, it has, right? So that in itself is advanced premium discount, just using the current weekly range. And you have this two-stage SMT. So notice how this asset closes bullish when it took this low out over here. We did not take that low out. And we close bearish, right? There's your strength switch. And I already talked about this SMT being low probability. Right? This two-stage is like pretty low probability, right? It's because it's not with a relevant level. It's in premium of the range. Like look where this asset is. It's in premium of the range. That's not where we look for a reversal to happen, right? That's where a retracement's happening. And where do we cap off SMT? Or where do we cap off retracements at relevant levels, right? In this range, there really is no relevant level though, like in this whole range. Literally the only relevant level in this case would pretty much just be the current weekly low, really. So you're kind of just looking for a swing points to confirm that retracement is over, and then we can trade the continuation, right? So if we can anticipate Friday on the oil triad to be bullish, then what does that mean for indices? They should be bearish because they move typically in the opposite directions. Now, not always, like not every single day, but typically that's the case, right? And we already see metals has already started to move lower, okay? So this makes sense. This move lower can make a lot of sense, right? Although I didn't capitalize on it because this is dog shit, in my opinion. Like, this is the daily open. It just opens up in dog shit price action. So there's really nowhere to go. There's really nowhere to, like, enter from, in my opinion, right? Or not for me, at least, the way I trade. So now it's just about when I come to my session, is there a target open for me to basically trade to, right? That's the number one thing, really, is drawing liquidity, right? If you have no target, then what are you trading for? That doesn't make any sense, right? So number one thing is target. So when I come to charts, I come to the charts pretty late. We're going to talk about this potential entry if you were trading around 10. So I would be still bearish here, right? Because we have this low available. You can obviously see that if we just mark out relevant lows within the weekly range, you have the weekly low here, the weekly high. Now, internal to that, you have this relevant low and this relevant low. I mean, you can also mark this as well, honestly. But if I go to the 4-hour chart, this is a swing low and that's not. So it's really just these two lows that I'm really main concerned about. And obviously we failed to manipulate this low. So if you fail to manipulate this low, you just place way through it and we come in close proximity to this other relevant low. Right now we're creating failure swings, right? So, you know, if we're not going to manipulate this low, then where are we going to go? Probably next low, the next relevant low. That's what I'm thinking, right? So although this daily candle is very large, very overextended, we still have a drawn liquidity. So it makes it okay to trade. You can see these previous sessions have expanded. If I mark out, I'm gonna use this indicator in a minute, but you can see Asia and London pretty much expand. So we want to see a New York retracement. This is what you really need to see, is a New York retracement. And here you have one that is like not bad, right? You have this manipulation here with this high here. If you go on YM, it's kind of like advanced pre-discount a little bit, right? This has it's like space out SMTs. So this is looking not too bad. I'm not a big fan how YM didn't do this though. I wish it swept out this high, right? But you're gonna see there's a strength switch PSP, so I would actually probably take this, right? So obviously you're gonna wait for this candle to close. So this is a expansion candle here. You're gonna wait for this next candle to close. Trade this one here. But if you look inside of this, well, I guess, hold on. This happened at, yeah, okay, this is actually weird now, actually. Now that I think about it, this is actually kind of fucked. Because you could wait for 1030. So here's 1030. You want to wait for 1030 because of the 9 AM candle, right? This 9 AM, 90 minute candle, super large wick. But even if you wait for 1030, the 1 hour wick is really large. So, I mean, and there's still 30 minutes left. I don't know. It's kind of like discretionary here. But what I did like about this is there's obviously a strength switch PSP here, right? So you have a bearish candle, you have a bullish candle. Again, I kind of wish we swept this high up, but it is what it is. So it's like, it's probably like a B setup or something like that. It's not A plus or anything like that, but it's all right, right? I like this V shape away, and you guys know I like to enter the first like reversal signature. This is a reversal signature to me, regardless of the like no type of CSD. Dude, the CSD's way down here. So this is the next best thing you're gonna get. It's like a V shape enter from the gap. That's basically your reversal confirmation is the V shape. So 1030 opens up right here. This next candle. So you're basically anticipating open, high, low close. The 15-minute PSP is the confirmation to this. So I obviously didn't take this because I woke up hella late. I woke up late as shit. But I would have taken this probably. Like, it's not that bad. And we do retrace very high in this range, which is not great. Like, you don't want to really see this. You see this right here? You don't really want to retrace up into OTE here. So this is not the best thing, but you'd already be in the trade, or I would already be in the trade. But I would not be entering this here. Right? This is what I would not be entering from. Because of these reverse signature, it's not that great, right? Look right here. Look at this 15-minute candle right now. We want this next 15-minute candle to technically expand lower, right? Not this deep ass retracement. Now, this is not even a valid candle 4 here, right? Because this one didn't expand away, right? So this is like not great reverse signatures. Like, look at it, guys. But you'd already be in the trade. That's the thing. So this is how you would manage, how I would manage it. Once we get the CSD here, secondly, this one, automatically move your stop loss from here. This goes back to my entry stream. From here to here. Or automatically move it from there. Now you want to see this range hold, right? Because we should be making lower highs, right? So here's the first lower high after reversal is formed. We should be seeing lower highs, and actually we should be seeing speed, right? Especially when 11 o'clock rolls around, right? Because now that 1 hour candle will close, right? Because we're basically trading a reversal candle. We're like anticipating it to be a reversal candle. But that's why it's a little bit riskier. Like I was saying, it's probably not A plus, right? Just considering everything, pretty low in the range, YM not super at the high. But I would say it's fine, right? Like it's fine as a trading day trade, eval trade. Like I would probably take this anyways. But that's because I'm like super aggressive with how I manage. That's why I like taking the first CSD. Because, dude, all I need for price to do is this, bro. Like, just give me a reaction off of that first CSD or first gap, or whatever I'm entering off of. Just give me a reaction off that. And I can move my stop loss already. Like, look what I did. I already moved it. So even if I take a loss, it's like a half loss. Like, who gives a shit, right? Like here, we need this gap to hold, right? And once we CSD here, now you can move your stop loss to break even, right? So either way, like even if you took this, It should be a break even regardless. Or maybe you took this CSD here. I probably wouldn't take that just because the reversal signature is not great. But if you did, you took this right here, your stop loss should be like at this high or at this body. Now it's going to be moved to here. So again, you would take a half loss, right? Because we mitigated the order block and we traded away from it, right? We created that lower high, right? We should be expanding because like my entry stream, we don't want to be seeing, once the price reverses, guys, we don't want to see deep retracement and expansion. That's kind of what we're doing right now. Deep retracement, like we shouldn't be returning back to these areas. And the reason why I like to enter the first CSD is because when we confirm these reactions off of key levels and we have SMT, pretty much we're going to get usually a retracement or a reversal. And when you enter the first CSD, it's much more forgiving when price retraces. Like this is clearly a retracing signature at this point, right? Very slow, choppy movement after expansion into a high. That's not really what a reversal looks like. But even when it's a retracement and you're technically wrong and price goes in your direction a little bit, just to retrace back into the range, I can already start to move my stop loss, let's go break even. Whereas if you're basically trading continuation in a retracement like this, it's not forgiving because it's not reversal, right? If for example, you enter here, bro, like off the continuation, and you're wrong about it being an actual reversal and going down here, it's harder to move your stop loss, right? You would need price to like basically do this or something like that, and then you can go break even or something like that. When I go into the first CSD, I just need a little reaction. That's it. So I personally like entering that first CSD, that first gap or whatever. Here you have to enter the gap because, like I said, the CSD is way too far. So this is something I probably would have taken, even though we have that YM equal highs and like the 1 hour is super large. Like the 90-minute is fine. We waited for the 90 minutes to basically open at 10:30. This is a relevant high right here. I mean, equal lows. It's good enough, you know. There's gonna be trades like this all the time, guys. It's like it's not A plus, but it's still okay to take. Right, and this is where you like de-risk. You're not risking like your regular percent probably on a trade like this. It's not the most high probable trade in the world. I personally don't risk the same amount per trade. That doesn't make any sense. Unless I'm only going to take like A plus, absolute A plus trades, which is something that you can do. Like this is all subjective with what you want to take, right? We're not always going to check the same trades. I'm just telling you what I probably would have taken right here. Probably would have been a break even for me, if anything. But you're going to see it does not really play out. We just like we just consolidate basically, right? Leave these highs here. And then once we take up this high, it just rips right through it. At that point, you have 1 hour until 1400. You might as well just wait for 1400 because this candle is an expansion candle. So you're going to see that this asset here pretty much expanded back into the daily range, in this range here. You're going to see that this next 1400 candle is opening up to this, next to this key level, right? So if we're not going to reverse, into some key level and discounts, price wants to go to premium, right, to the next key level, essentially. But we're going to see that this asset here is retracing into the EQ of this range or into some highs. This is technically a high. It's just a higher tip from gap, right? It's basically tracing into key levels, right? Well, this asset is just